Bank of America releases a new loan type dedicated to helping minorities and minority communities, but is it actually not good and is it bad? Jeremy Knight, the Knight Group, your favorite Austrian realtor. That's what we're going to talk about today. A lot of people saw that this article landed from CNBC. Now, the headline reads Bank of America launches zero down payment mortgages to help minorities buy their first term homes. Now, a lot of people might not have been very happy with the headline of this. In fact, I believe CNBC went back and stealth edited it. It's actually a loan type to help minorities and minority communities, and it's not dedicated just to minorities. In fact, we'll read through it real quick and look through it. But the reality is that there's some concerning things about these loans. And so we'll talk about them and they'll be up for you to decide, are they good? Are they bad? Do they come with pros and cons? We're going to talk about those right now. And drop a comment below. I want to hear from you. Are you somebody that might benefit from one of these loans? Have you read about them? Do you know about them? Are you looking to buy a home right now and need down payment assistance or something? Definitely reach out because I have some good information for you there. Okay, and drop a comment. All right, so here we go. Obviously, yes, you saw the headline here. Bank of America launches zero down payment loans. So basically, the way this works right now, if you wanted to get a down payment assistant loans, there are a few different loan types out there for down payment assistance. Now, we've had clients that have done, a T-Shack loan, and I've actually talked about some of these loan types on the channel in the past. In fact, there used to be in the Austin area a USDA loan, which is a zero down loan. But since the USDA's moved further around and moved out, it actually isn't something we see a lot anymore. So that was a very good loan type. In fact, I had a lot of people use that. Some of these loan types that come out with like the T-Shack loans, what happens is they're more of a grant. So they give you the down payment and everything, and it's forgivable after X amount of years. So you still have to own the home X amount of years, yet if you do, then it's forgiven. If you don't, then you actually have to pay it back. So that's something, we'll get to the pros and cons of this and what it's aimed to do, but that is something that we've seen clients in the past use. So that's basically what kind of like this loan would be in minority communities. So let's look and see what this actually is. So Bank of America is launching a new zero down closing cost mortgage products, help members of predominantly minority communities buy their first homes. The article right here, it does say that applicants do not have to be Black or Latino to qualify for these loans. But basically, here's what it says: to help narrow down homeownership gap among Black and Hispanic Latino communities, Bank of America is launching a new loan program, payment zero closing cost mortgage products to help people in the minority communities buy their first home. The program is in Charlotte, North Carolina, Dallas, Detroit, Los Angeles, and Miami. So those are the areas that they're targeting first. The loans are subject to rigorous underwriting and are based on credit guidelines, including on-time payments, including rents, utilities, phone, and auto insurance payments. Eligibility is based on income and home location. No minimum credit score or mortgage insurance is required. That's pretty important because something that most buyers, doesn't matter who you are, don't understand is that when you actually get a mortgage, the mortgage company is going to charge you some down payment, right? So they charge like a 1% origination fee. So there's closing costs. And so what some of this loan's supposed to do is actually take it where you don't have those closing costs. So it is a true zero down. In the past, when we've done some different loan types like this, we've had clients show up at closing and actually get money at closing. So there are definitely a lot of loan programs out there, but let's read a little more. Our community affordable loan situation will help make the dream sustain ownership attainable for Black and Hispanic families. And it's part of the broader commitment to communities that we serve. AJ Bruckley, head of neighborhood communities. All right, so if we scroll down here, here's pretty interesting. And I think this is why they're doing these loan types. It says, as the U.S. homeownership rate climbed 65% in 2020 and the highest annual rise of record, the homeownership rate 43.4% for Black Americans, 51.1 for Hispanic Americans, and 61.7 for Asian Americans. So first off, before I go any further, what are your thoughts on that in general? Drop a comment below. I just want to hear from you. I'm just trying to throw a fastball down the middle and give you the facts on all of this. So I want to hear from you in the comments on this video. Moreover, Black and Hispanic mortgage applicants were more likely to be rejected for loans with 7% compared to white and Asian applicants of 4% and 3% productively. Bank of America separately has made a $15 billion community homeownership commitment to help individuals and families purchase affordable homes by 2025. The program includes affordable mortgages, grants, and educational opportunities. To date, the program has helped more than 36,000 individual families become homeowners. 2/3 of the program loan grant made through the program have helped multicultural clients become homeowners. Okay, so that's basically what CNBC put out on their article here. But I think it's really important that we switch over and look at something important as well. There's some other articles that came out because people thought that this loan was a little unfair. Yet again, you don't actually have to be, of a specific group in order to apply for the loan. So there's a few articles about that. So what I do want to get to is this article by MoneyWise. What I think is really important is this article because it does highlight some things that we need to think about. You decide whether they're good or bad. It's not up to me to do that. I'm just giving you the information here. So here we go. 2008 all over again. Bank of America just launched a test for zero down payment, zero cost mortgages for minority communities. Again, it just starts off going back over what we talked about with the CNBC article. So let's go down here. So no money down loans, a timely boost. So rising interest rates are making mortgages more expensive and creating downward pressure on lenders to ensure their loans are risk adverse as possible. Bank of America programs is meant to break from this by freeing qualified applicants from down payments, credit scores, and standards of PMI. One thing to note here, though, with some of these loan types, these grant programs, typically the interest rate for these are higher. So I'm curious if they're going to talk about the interest rate being higher and even higher than they already are going forward. Again, I mentioned the closing costs earlier. I think that's really important for most people to understand too. So let's continue reading because I do want to get to why this could potentially be a bad idea. However, critics of the program were quick to point out that it could backfire and potentially harm communities it's designed to help. The 2008 housing crisis, which was heavily driven by risky loans to unqualified buyers, taught tough lessons to lenders who were stuck with foreclosed homes after buyers stopped making the payments on their properties. What's interesting is a lot of people that are talking about the market crashing right now, since 2008, these lending laws have gotten a lot better. And so since they're so much better, that's why we're not seeing as many foreclosures right now. In fact, if we look at this, it actually shows the amount of foreclosures is way down. In 2021, we actually didn't have very many foreclosures because of all of the, rules and regulations that came out during that time and the forbearance rules. But if you look at 22, we are back up to the 2021 numbers. So it's curious to see what happens the rest of the year. Inventory is going up. So do we start seeing more foreclosures? Drop a comment if you think that we're going to start seeing more foreclosures. So anyway, this goes on to say that the consequences for those loan types were devastating. Lenders inherited foreclosed homes and buyers saw their credit score sink. It's likely at least some of the borrowers under Bank of America new program would be considered subprime under ordinary lending rules, recalling that the ugliest days of the 2008 crisis and supply critics with easy talking points. Credit scores agencies like Experian, for instance, consider borrowers with credit scores between 580 and 699 as subprime. And while credit scores aren't always accurate barometer of a buyer's purchase power, the ability to make timely payments, advocates worry the interest rates required to make up the low bar the lender is setting could set minorities up for failure. So basically what they're saying in this whole thing is that this could actually set up minorities in these communities for failure if they don't have their ducks in a row. One thing that's really interesting about these programs though, and it's that I should notate, is that when you're going through these programs, you actually do in order to get one of these programs where it's a grant or something like that, you actually have to take a course and you go through a course on how to pay your bills and do all that stuff regardless of what community you're in. If you do one of these loan types, they do have that requirement. So basically what this article is saying is that we're about to see more subprime loans and people getting in trouble. What are your thoughts here though? Do you think that this is going to put people at risk? I personally think we should always do more to help people educate themselves on financial situations. That's what we try to do on this channel, is educate people on doing things financially, fiscally safe. So what do you think? Drop a comment below. Are these loans going to be good loans, bad loans? I want to hear from you in the comments. Jeremy at the Night Group, have a great day.